Good morning, everybody, and welcome to this week's weekly analysis session for Monday, the 9th of November 2015. DMAC here, recording this session early. I have some commitments that I need to attend to first thing Monday morning, so recording this over the course of the weekend, well in time for your weekly analysis session of your own and to catch up and find out what's been happening on the market. So let's get things underway. First of all, our disclaimer: the content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. So please, before making an investing decision based on the general advice presented in any of our presentations, please consider whether the advice is appropriate in light of your financial circumstances. Disclaimer under the way. So today we'll have a look at what's been happening on the markets, the US and the Australian market. Certainly both marching to different beats at this particular point in time. We'll have a look at some specific setups. We'll also have a look at a bit of the watch list in terms of those stocks who are now in a position where we're able to trail the stops once again, any stocks that have exhibited price volume volatility signals of late, and any stop outs along the way. Unfortunately, no Q&A today because it is a recorded session, but certainly following Monday we will have time for Q&A. Or failing that, certainly feel free to send either of your ETC coaches an email or a call, or get in contact and we'll assist in any way that we can. Portfolio management, the benchmarking model at this stage, the ASX 200, we are still in very high market risk and as such needing to apply a 20% market risk multiplier. By comparison, the S&P 1500 is now in what we call low market risk, and as a result we are able to use our full value at risk, that is 100% of our maximum allowable drawdown. Now, assuming we are allowed a maximum allowable drawdown of 15% and we are splitting that between our markets, it means that half of that maximum allowable drawdown, 7.5%, we would allocate to the Australian market, and because we are currently in very high market risk mode, we are only allowed to use 20% of that allowable 7.5%, so that gives us a value at risk across our Australian part of the portfolio of only 1.5%. By comparison, the US, we are now in low market risk territory. It's been a while since we've been at that particular level, and as such you are allowed to use every bit of that 7.5%, so 100% of that, meaning that your value at risk across the US portion of your portfolio is 7.5% of your total maximum allowable drawdown. All right, just a bit of a recap. Hopefully by now you've caught up on Friday's macroeconomics analysis session. I was away on Friday, so you would have had Jeff all to yourself. A reminder about the education sessions that we run on a weekly basis. Last week we did a session on Japanese candlesticks, so just having a bit of a review on the importance of understanding the candlesticks, looking at blended candles as well in association with overall trend. All right, so let's go through and actually have a bit of a look at what happened on the markets, our portfolio risk at this point in time. You'll see here we've got the ASX 200. Last week it looked like we were going to get above the next level on our stochastic, above 40 there. We failed at that level and we've just sort of rolled over. Again, our price action responding much more quickly than any other form of indicator. So for the time being, we are still in very high market risk, and as a result, there's our 20% market risk multiplier. Certainly a big difference when you compare the movements of our markets over an extended period of time with what's going on in the US. So here we have the S&P 1500 since bottoming out at around about the 435 level. It's certainly just been onwards and upwards for this benchmark for the time being. Interesting to note at the same time that our longer term moving average has now just started to move up as well. So that's just been the strength of this particular rebound. This really a massive volatility type of event through here. It's not the sort of thing that you see all that often, but certainly a lot of pain through this particular area. Knocked a lot of stocks out of the watch list, but surprisingly, those that have remained in have rebounded pretty nicely. And this week, there's quite a number of stocks that have actually had their protective stops trailed. So again, holding their line through this massive volatility through here, and now continuing to move in the appropriate direction, which is great. So what we might do first and foremost is go through and have a look at the setups in the ASX to start with. A couple of setups from last week are still in here, one of those being HFA. Last week we had this short-term uptrend, the previous week, and last week's candle, good looking candle, lots of white candles in this overall trend, good relative strength, and as such we discussed the previous week that the price action, last trough coming in at or above second from last medium-term peak, so all things going well there. We just need to wait and break our long-term peak, certainly in terms of zooming out. With a little bit of help from beyond charts there, we'll zoom out 100% and see where we are. We've certainly coming up to these old levels, which is a long time ago, back in 2008. That's the last significant point of demand, if you like. So that old point of demand can act as a point of supply into the future. We're now up and certainly getting past those levels there. Right at this point, we're testing, having our first test, coming back, rebounding. We've just got to break that level. So that still remains on the watch list, on stop at $3.03 with a limit to 304 and a protective stop coming in at $2.67. TWE, this is a new one this week, Treasury Wines Estate. You'll see there's a bit of a gap up through here. We've had a retracement, and last week, fairly nice candle last week, and as such confirming a short-term uptrend. By doing that, it's also formed a new medium-term trough. And where is that trough in relation to the second from last peak? There's our second from last peak. You can see that trough's formed nice and high above that particular level, showing a very good demand coming in, really good relative strength, and as such, we got the simple task of just placing an on-stop order. Remember, 0.5% above our last medium-term peak. Last medium-term peak there at 752, so an on-stop order 0.5% above that has as on-stop order at $7.55 with a limit to $7.59, and at the same time putting in a protective stop at least 2 ATRs away from our entry level, and also at least 0.5% below that last medium-term trough. Sees the protective stop coming in at $6.85. If we just zoom out 100%, you'll see that we are at all-time highs, which is again a very positive sign for this particular stock. So after a period where price had moved up and retraced, it's now past our older longer-term peaks, which is obviously a positive sign, having to soak up all that supply and moving up strongly over the course of the last few weeks. That's TWE. Next cab off the rank, this was one from last week as well. This is UXC. Again, we just need to wait for price to breach our last medium-term peak. Price action, last trough, well clear of our second from last medium-term peak. Good relative strength over the last couple of months. Last week's candle, a little bit of a tail on that. Still got a fair bit of work to do before we get up to our triggering levels, but certainly does tick all the requirements of our trading plan and the price action filter as well. The other one from last week, which hasn't yet triggered, is MVP, Medical Developments International. The previous week, we'd had a couple of candles shaping up to be pin bars, more bearish pin bars than bullish pin bars. Obviously, if it was a bullish pin bar, we would have had the tails on the lower end rather than the top end. Certainly a little bit of supply coming in here pushing down, but last week's candle looking quite good in that gapping up at the beginning of the week and closing towards the upper end of its range as well. So looking positive at this point of time. So the order is still in the watch list, exactly the same as it was the previous week. So on stop at 352 with a limit to 354. Protective stop coming in at $2.92. That's Medical Developments Limited. What we might do whilst we are in the Australian portfolio is just go through and have a little bit of a look and see whether there were any changes to any of the stocks from the previous week. TPM, which was in the list last week, that has now triggered. You'll see on the right-hand side there, that last candle just triggering that order in there. at 11.19. So that is now showing as open in the watch list. A couple of trailed stops as well. ARB. ARB. There we go. Had a trailed stop. So again, last couple of weeks in this particular stock have been quite strong, and as a result, dragging that trailing 3A TR stop in the right direction. Another one, APE. We'll have another look at that. Again, just last week's candle, putting in a higher close, and as a result, are now dragging that 3A TR line to the upward side again, which is a good thing to see. There weren't any stop outs last week. There were a couple of price volume volatility signals, one on BKL, Blackmores, which has been moving along very, very nicely. We spoke a little bit about this during the course of last week's session, that those of you who may have watched during the middle of the week, seeing BKL get up towards the $200 level, which in terms of the initial risk compared to the reward, that was around about a 10 to 12 hour result, sitting still very clearly well above its trailing stop at the moment. And again, I'll continue to manage this with the use of the trailing stop just to see where this gets to. Again, price volume volatility signal last week, so if you haven't already taken some profit on this, then being up such a significant amount, it certainly makes sense to take some off the table and see where the rest goes. You can always get back in. So that was one of the price volume volatilities on BKL. The other one, just on a stock that we entered in recently, CKF, Collins Foods. Owners of Kentucky Fried Chicken as well. Again, price volume volatility signal going off at this point. Nothing to do, really meaningless at this point in time. Really only needing to take actions once you're up a sufficient amount, and that as a general rule, as a bare minimum, no less than 1-to-1, preferably once you get past 2-to-1, because obviously you want to make sure that you when you're taking your profits, if you're taking them at 1-to-1, you're going to need a really high strike rate to remain profitable over the longer term. Because remember, if you happen to get stopped out for the full 1R, then you're going to need to have a strike rate of at least 50%, closer to 55%, in order to remain keep your head above water. So certainly once you get up towards that sort of 2-to-1 type of risk reward setup, and your price volume volatility signal goes off, sure, if you've done that in the space of 8 to 10 weeks, something like that, then it makes sense to take a little bit off the table, typically half of your position, manage the trade, and if there's an opportunity for another entry to get back in, then absolutely put that half back in again once you've got good, strong price action. So that's the Australian side of the markets. Let's go across and have a look at the US at this particular point in time. So we'll go through and have a look first and foremost at the US setups. There was only a couple this week, which was a little bit surprising given the strength of the market. I think the main thing is that we're just not quite getting sufficient price action as a result, and not getting all the setups that are meeting our criteria. Certainly a lot of stocks starting to move in the right direction, but we're not getting that nice stair-stepping fashion, and if we are getting it, then we're not getting the formation of those last troughs at or above the second from last medium-term peak. There is one here, however, on Coresight Realty. Last week's candle, higher high and higher low, so therefore short-term uptrend being created, and as a result, the low between our short-term downtrend and short-term uptrend is by definition a medium-term trough. That medium-term trough is well above the second from last medium-term peak. There's our last medium-term peak, the second from last, all the way down here. So well above that in terms of our price action filter. Obviously, coming up on the scan, it's got good relative strength in all three time frames. So really all we need to do is just zoom out and see where we are amongst the broader history. And as you can see, we are at all-time highs. Certainly not a stock that races upwards. It tends to have fits and spurts where it moves upwards, goes sideways, moves upwards, goes sideways, moves upwards. How far is this going to go next time? Who knows? Very difficult to tell. Is this going to keep going up towards 80, or are we going to stagnate and go sideways? We'll have to wait and see whether this one triggers, but certainly for the time being, looking a very good setup in terms of its price action. All we need to do now is break above that last medium-term peak. So as such, an on-stop order coming in at $58.71 with a limit to $59.59. Protective stop coming in at $53.83, and that's outside of 2 ATRs from our entry level. So we're at least 2 ATRs from our entry level where our protective stop has to go. And remember, our protective stop also needs to be a minimum of 0.5% below the most recent medium-term trough. That's Core Site Realty. And the only other one was one from last week, UHAL. Again, putting in a higher high and a higher low, so still continuing its short-term uptrend. We haven't quite got to the trigger level yet. The on-stop trigger is 416.20. with a limit to 418.27. So that on-stop order there is 0.5% above the last medium-term peak, which is above this level here. The high there, 409.48, so 0.5% above that level, has at on-stop order at 416.20. Our protective stop coming in at least 2 ATRs below our entry level, and at least 0.5% below that last medium-term trough sees our protective stop come in at $382.82. They were the only two in the US that satisfied all the price action. So given that there was this was in from the previous week, really only one new valid setup. In the US portfolio, stop outs, there was one, and that was CHD. So let's go through and have a bit of a look at CHD and see what happened there. So again, entry levels back here, moved out of the blocks fairly reasonably and then really just sort of went sideways for a while. Found a little bit of strength, but more recently last week, coming off the previous week, opening up, as you'll see there, around about $87, but closing well below the 3 ATR trailing stop. So that's an exit at market on Monday evening. So that one there, coming out with a little bit of profit on that one, but took a long time throughout the way, but certainly not doing any damage to the overall P&L of the watch list, that one. No other stop outs in the US. A number of trailed stops, and we'll go through these now. CASY, Casey. And I think from memory, a number of you probably got this one in your portfolios. And again, really nice candle last week, closing on its highs. Very bullish candle, looking really, really good. So that's done a lot of work last week, and really good relative strength. You can see here that it had been just over the last 5 or 6 weeks as the market continued to move upwards, just going a little bit sideways, but last week really putting on a nice candle. So that's Casey, that's trail stop, moving in the right directions. The other one's GPN, Global Payments. Just bring him up at the moment. This particular stock here, again, really lots of white candles throughout. That was the at the end of August, so experienced a bit of volatility. But since then has just been continuing to move onwards and upwards, looking really good at this stage. And in terms of risk to reward, look, that trailing 3 ATR at the moment is certainly well above at least 2 to 1 where that is, and where price currently is. You're looking about around about 4, 5, getting close to 6 to 1 in terms of where the actual reward is compared to the risk. Around about a bit over $3.30 risk on this particular trade, and from that point, from $53, we're now up at $69. So what's that, about 16? So getting on around about closer to around about 4.5 on GPN. So that's looking very good. LII, Lennox International, been a little bit more volatile, hasn't it? Up and down along the way. And you've had a couple of moves where prices actually, during the course of each week, has spent some time below the trailing 3 ATR, only to be pushed back up above it. And the last month in particular, really, really strong performance, going really, really nicely. Lennox International, MANH, Manhattan Associates. Again, similar sort of thing. Spent a bit of time during that late August time period below the trailing 3 ATR during one of those periods during the course of the week, and then moving up. Really nice price action as well of late. MANH, and again, in terms of initial risk compared to reward at the moment, travelling in the right direction and doing all the right things. You have to be patient, folks. Sometimes these trades are going to take a while to build up into profitable trades, and that's the hardest part, just being patient and allowing them to become, or creating the environment that allows them to go on to become really profitable trades for you. Vail Resorts last week, again, higher highs, nice higher close, and again dragging that trailing 3 ATR up as well. TSS, Total System Services, and again last week just a higher close than the previous week. Certainly not a huge degree of movement in that. You will notice the price volume volatility signal going off on that one as well. So prices become a little bit stretched, and at the same time obviously experiencing a significant increase in volume associated typically with a bearish candle. This one here being certainly a little bit indecisive, and at that point in time, certainly if you are in this trade, it's an opportunity for you to consider taking part profits, and particularly given what the initial risk on the trade was compared to where it is now, I think it makes sense to take part profits on that and look for another opportunity to get back in. So good question, thinking about this, what would a good opportunity to get back in? Well, certainly a retracement, putting in a higher trough is always a very positive sign. So once you see the formation of a trough, and that trough is higher than the last trough, that's also, obviously a very, very strong sign. And then certainly a close above what would be a previous medium-term peak, another opportunity to add back into a position that you already have. Other stocks that have had trailed stops, WDFC. Again, last week's candle gapping up on the open and closing higher as well, and as a result, trailing its stop up in the right direction. And AIZ was the last one. Sorry, not AT, AIZ. Assurant Inc. Really nice candle last week, and as such, dragging that 3 ATR line upwards as well. So doing all the right things along the way. In terms of price volume volatility signals, there were a couple. Starbucks, I'll just bring these up. Not all of these were necessarily of last week. This one was. So again, just thinking about in terms of what your initial risk is compared to current price levels, where that's gone off at around about the 2-to-1 level. So certainly opportunity to take part profits on a Starbucks. TSS was one. So I'll just go through as I've got them listed, and again thinking about the profits that you've made on that. WDFC, this was a couple of weeks ago, so really just wanting to highlight the importance of keeping these in mind and making sure that when you're setting up your overlays, your templates, etc., your watch list, that you've got your price volume volatility signal on there. It's very easy to forget to put that on there, and then somewhere along the way, seeing opportunities to potentially take some profits, particularly if you're up at that 2-to-1 level. You'd probably be a little bit cross if you didn't take the opportunity later on and found out that this thing had then come back down to much lower levels. So again, just make sure that you've got that price volume volatility signal on any of your analyses that you create for your watch list. And the other one was EXR. And the reason for bringing this one up, it's only just gone off in the last couple of weeks. So even though being triggered through here, just to make sure that your understanding of the rules, we're not sufficiently up in the trade. At this point in time, we're actually a little bit below water on the trade. So at that point, nothing to do. We really don't want to take action once we're getting to that 2-to-1 type of reward based on our initial risk. And that makes an ideal opportunity to take a little bit off the table, given that that's going to assist you build your profitability, building up your expectancy over the longer period of time, and then looking to get back into the position should the price action hold up and continue to move in the appropriate direction. So it's really just an opportunity to minimize some risk. Obviously, whilst your money is in the market, it is always at risk, and that certainly comes home to roost when you get those big volatile events like we had at the end of August. All right, folks, that's pretty much wraps it up for this particular week. There will be an education session on Wednesday, and again, if you've got any suggestions for that, please let me know. I'm happy to cover any topics you'd like covered. All right, that's it for me. As I said, a recording this weekend. They will be back to live webinars the following week. I've got a couple of Trading Plan Plus workshops coming up in Melbourne, Sydney and Brisbane over the course of the next few weeks, so I might bump into a couple of you there if you choose to come along. But other than that, we will catch up with you next Monday. Bye for now.